late night, ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today I want to just do an update kind of on a previous video that we touched on at the end of the week last week. So we talked about protecting our profits of these positions that have moved a little bit more aggressively off their lows with stop losses. We've actually seen a few of those stop losses hit on some of our altcoins. So what I've done essentially is just protected the profit of that position. So depending on it, whether we booked 30% or 25% profits, some of these positions are up, even more. We'll take a look at some of our stocks that are even up to over 100% returns in a very short amount of time. What I want to focus on is really making sure that I'm not going to round trip these gains, but I'm also going to maintain exposure to the market in case we get that continued strength and that another leg up here. So we're going to take a look at our chart. The first thing I want to talk about is on our investment tracker here. So a few of these coins that did hit our stop loss and took our profit off the table. We see Tau that hit. We realized 30% profit on that trade, taking the gains off the table, adding it to our cash position, and then now we're just looking to reinvest that capital back into the market on dips. It doesn't have to be in the same asset. It doesn't even have to be in the same asset class. All we do is we get into our positions, we protect those gains as soon as we can. We make sure that we're continuing to trail those stop losses up, continuing to protect it as they keep rising. And then when price does eventually fall back down, because you know my thoughts, nothing goes up forever, nothing goes straight up without retesting support, we then are able to actually mitigate that risk by essentially utilizing stop losses underneath that structural support. If it breaks, we're likely to continue lower. So we've booked our profits. We've got our stop loss for the remainder of the position at entry. Essentially booking profits. It's a risk-free trade, a win-win-win scenario kind of thing. So that's what we want to do with as much of our assets as possible. So CAS, we took some profit off the table. Virtual, we've taken some profit off the table. Tau, we've taken profit off the table. And now coming down here, I want to show you more of our stock purchases. So we see right here, the big one that I want to highlight, CoreWeave, we're up 106% in 1 month. So we entered this position a month ago at $39. The price is currently $80.30. So 105% move in 1 month. That's a really good move. We're really happy to have caught that trade. So what I'm going to do now is I'm putting my stop loss at $78 here, 2 times the initial entry. So that's what I say, when you get 100% trade, you're always, it's not always, you're very often better off to either take half off the table, let that position ride. It's now a free trade essentially. You're using house money, or you use a stop loss to protect it so you can maintain that exposure to the upside. And if worst case, price comes back to $78, triggers my stop loss, and I only realize 100% returns on that. Unfortunately, with this one, on my own personal strategy, I got wicked out of the partial position around earnings. We had this crazy volatile move from about $55 up to $75, back to $60, and now we're back up to $80. So crazy volatility, but we did realize a blended return of 80% on that position, and we've got our stop loss at entry for the remainder of that position. So we've almost doubled our money in 1 month. We've protected it, we've realized profits, and we're looking to reinvest that capital when we get a dip. So this is a very volatile stock. I expect that we're going to have some volatile moves to the downside as well. This has been a very quick and severe impulse to the upside, and I do think we need to retest support. So I'm just playing it safe, protecting those gains, and looking to reinvest them. Same thing here on NVIDIA. We're up 35%. We entered around 101. We can put our stop loss, in that 120 to 125 zone and protect 25% profits. So we want to just take our profits off the table, add it to our cash position, reinvest it when it makes more technical sense to do so, recognizing that the markets may be getting a little bit overheated. They've kind of just run straight up from the lows without retesting some of the more key support levels on the higher time frame. Palantir here, we have a stop loss at about 120. Again, protecting about 25% returns. Baba, about same thing. So when we get to 20-30% plus returns on these trades, I like to protect those gains. I don't want to round trip them, especially when we have multiple positions. So if you take 30% profits off the table between 3 different positions, you've essentially realized almost 90 to 100% returns across all those trades. So keep that in mind. MSTY here, we got in pretty early. We've already been paid a dividend here, so we got about a 10% dividend, and we're up 5% on the position. This is kind of a income farming strategy, so we're just going to hold it at stop loss rate around entry, and we'll continue getting those dividends until we get taken out of that position. So this is pretty risk free. We've realized 10%, assuming that the stop loss doesn't get hit. We can continue holding this and continue receiving those monthly dividends of about 10%. MicroStrategy in at about 290, up almost 40%. We've got our stop loss at 375, protecting those positions, as well as the SPY and the QQQ. We got in right around the lows. It doesn't hurt to protect these positions as well, so you could look at putting a stop loss in anywhere from that 10 to 15% gains. I don't think that we're just going to continue going straight up and up and up. You know, I do think as a chartist, as a technical analyst, I have to kind of go back to what history commonly says, and more often than not, we do retrace and revisit those support levels. So we're going to flip over to Bitcoin here, and that's a little bit kind of just to protect against the bearish potential. So let's look at the bullish potential here and the potential bullish outlook for Bitcoin and its continuation on another leg. So what I see here is kind of a similarity to the prior cycle. So this over here is 2021 and 2022 cycle. We pretty much saw this downtrend here. We had a secondary peak, and then we had a secondary downtrend followed by a dead cat lower high bounce into resistance before continuing into the bear market downtrend. So what I want to see is whether we're mimicking this secondary extension here, or if we're mimicking that dead cat bounce extension that we saw over here kind of in 2022. So looking here at all of our indicators, first one here, our big money buy indicator, we saw 2 gold bars flashing during the downwards consolidation phase of this downtrend. We didn't see that here, so we haven't had that signal flash. That's one difference. We did get a bullish divergence here, so lower lows on the price action and higher lows on the RSI, similar to what we saw over here. Bullish divergence here on the price action and RSI. Looking at the MACD, we came into oversold territory, got that bullish cross and continued up. Looking at the vortex indicator, we had the blue line breaking above that red line here and holding above it, and that signaled that uptrend there, similar to what we saw over here. So we had our break, held above it, and now this is the dominant bullish trend right now on the daily chart. And same thing that we saw here, we started to see the bearish trend, so that orange line on top with the ADX start to lose momentum, eventually getting the blue DMI positive line breaking out above both of these for that signal that the bullish trend is starting to begin. And that's what we kind of saw over here. So downtrending price action of the bearish momentum, and the blue line breaking out and above, holding above here, confirming that the bullish trend is building here. And same thing on our Bitcoin pair strength indicator. Slight differences here in the shading between the green and the red. But what I'm looking at is kind of the structure of these moving averages. We can see we were stuck underneath. This was resistance, this moving average, during that downtrend. Same thing that we saw over here. So during this whole downtrend, you can see price stuck under that resistance on the Bitcoin pair strength indicator. But then we saw it start to break out above, bounce, hold it as support, and then continue to the upside. So we started to see that as well. We're seeing a nice move here by Bitcoin. So from a technical perspective, we could just be in this secondary extension here. Ideally, that's the most bullish. You know, I do recognize we could go to a first kind of major resistance I see for Bitcoin, obviously at the all-time highs. So right around 110,000 is going to be a big psychological barrier, as well as resistance from the prior all-time highs. But the weekly and the daily charts are looking pretty good here for a move in the near term. We can't ignore this bullish price action. This is uptrend on the daily, so we can see we're well above our moving averages here. We've got the 50-day curling back up, which is kind of what makes me think we might be more similar to what we saw on that secondary extension back there. I'm going to flip to the weekly chart because the price action is a little bit easier to compare here. So what we can see, we've got our two cycles, the two past prior cycles. So major first extension, bear market cross, consolidation, we came up, and look at this move breaking above the 200-day where we got that 50-day curling back up. And you know, I'm sure a lot of people chased this move up here. That's not what we do as technical analysts. We wait for the retest of support. So all I did, pull that Fibonacci level, we got that convincing breakout, and look for that higher low. So in this instance here, we came within the 0.5 to 618 zone. We didn't quite hit that 618, so we're going to pay attention to that over here. But what we can see is a pretty similar move. So we had, essentially, we came up, and then we had this swift correction here. We came down, 55% drop. And then we pumped up, initially a crazy pump, 80%, before going into another correction. So we came down again, 26%, gave you that entry. This is where we want to enter, and then riding it to the upside. So when we look at this chart, and if we expect history to kind of rhyme or repeat, do you think this is going to just continue straight up forever, or do we come back and retest support? You know, the technical analyst in me says we come back and retest support, similar to what we did over here. So all we're going to do, pull our Fibonacci level from this swing low to this high. If the rally keeps extending, we'll adjust our Fibonacci level as we see fit, but aiming for that 0.5 Fibonacci, similar to what we saw here, is where we're going to start building that swing position, or potentially look to add to our Bitcoin positions or our proxies, and that would be a nice retest of these moving averages, as well as this pretty key support level through here. You can also see it did act as prior support in through the prior range highs, so this is going to be really important to hold right here. But we could still go down to 74,000 and theoretically hold the higher low structure on the weekly. So it's a little interesting, this one. We're going to look to start building a swing position here around 91,000 and then potentially down to the 786. As we come lower and lower in this region here, we may look to start increasing our buys, kind of that dynamic DCA style. But we really want to see this 50-day break above that 200-day with that bullish momentum so that we can see something like this over here. But we're always recognize nothing goes straight up forever. There's always opportunities to enter at a better price, or not always, but more often than not. If we miss certain entries, that's okay. We just have to, we've preserved our capital. We haven't taken any excessive or unnecessary risks, and we can look to utilize that capital elsewhere. So basically looking for the best technical setups, not chasing breakout moves like this that are right into resistance, right near highs. Wait for that higher low retest. Wait for those moving averages to stack in that bullish trend. Remember what I said, the price action above the 50-day, above the 200-day is kind of that macro uptrend price action that we're looking for. So watch for that bullish cross that we might see here. Similar though to where we approach the bearish cross, we experience a lot of the downside more immediately. So before the bullish here, obviously we get our bullish impulse and the moving averages are lagging. So they're just approaching that bullish cross, which might mean, like we saw over here, by the time we hit that bullish cross, we already started that retracement. So just don't over risk yourself, don't over leverage yourself. We don't really want to chase something like this. This has been a straight up move for the last almost 2 months. Wait for the higher low entry, wait for the retest of support, get in when it makes more technical sense to do so, backed by our multi-time frame indicator setup. So I talked about that in the prior videos. I'll link those at the end of this video as well to reference. But make sure we're just continuing the exact same strategy that we always follow. We're mitigating risk, we're protecting our profits, and we're looking to strategically reinvest back into the market. You know, make sure we're maximizing our buying power, maximizing our exposure, while also mitigating that risk. So it's, you know, there's a lot of moving parts. That's why I'm here to help you every day. If you want to join the Telegram group, it's a great place to get in touch and get a hold of me outside of videos. I'm going to be kind of scaling back a little bit on the amount of videos that I'm putting out. It's going to be more like 3 to 4 per week. I really want to focus on the analysis and bringing you guys really strong setups, really good looking setups. I don't want to spend so much time on the media side of things that I'm actually kind of missing out on opportunities. So I've noticed that a couple times. It is hard. We all live lives, you know, we have things going on, but we have jobs, lives, we have things to do, responsibilities. So we just want to make sure that we're finding these strong setups, we're setting these alerts, and we're pulling the trigger when we actually get those retracements. So we've done really well so far. I want to make sure that we're continuing to bring the best possible setups and really helping you guys learn the skills, show you the tools, and really increase that chance and work towards the financial freedom that we're all working towards. So thank you so much for watching, guys. I'll see you in the next one. And if you do want to get a hold of me, join the Telegram group. It's free. I share all kinds of insights outside of the videos, specific trade setups. You can chat with the community. You can ask questions, talk with each other. You know, it's a great group of people all looking to increase their knowledge. Very passionate people. I love to see it. I love to see self-directed investors really, you know, with that drive for success. So the more we can do, the better we can kind of invest both our money and our time, the more successful we can be in the markets. That's the whole goal of this channel. That's the whole goal of everything I teach. And I hope it helps you achieve that financial freedom as it has for me. So we'll continue going forward, and I'm looking forward to the future. Yeah, and we're going to make sure that we're always following that key strategy at the end of the day. No emotion, just data and execution. So thanks so much, guys, and I'll see you in the next one.